The next financial crisis will not start in traditional banks. It is the private credit markets. I need you to pay attention. This is a $2 trillion market, and regulators say that they're flying blind. Do you guys remember subprime mortgage collapse 2006 to 2008 that destroyed our parents' retirement? This could be $2 to $4 trillion. Just like the subprime mortgage, it destroyed our parents' retirement. Regulators are now starting to see cracks. Jamie Dimon, about 5 months ago, said where there's one roach, there's many. The Blue Owl CEO said, hey, our books are good. Then 5 months later, people started trying to withdraw. You're starting to see cracks, hidden leverage, fake valuations, and liquidity issues. But why is this happening? That's what I want to help you guys understand. Is interest rates were so low for such a long time, they started to develop these private credit markets, which are non-bank financial institutions that are not regulated. So when you can get money very cheap, non-regulated financial institutions were giving out credit. But now, this is why it's happening. Because after pandemic, interest rates went up and they've stayed high for a long time. Trump ran on low interest rates, printing of money, bringing money back into the economy. Now with the Straits of Hormuz being closed down, interest rates staying steady and interest rates creeping up, this is causing a domino effect in the private credit markets. These private credit markets have lent to tech companies, small businesses, people that couldn't get traditional lending. So not only does it affect the companies that gave the lending, it affects businesses. So here's the thing. If they've limited withdrawals now of people who are invested in these private credit markets, they basically stop them from withdrawing. So they can withdraw monthly. That will extend the pain out. But if interest rates, that's what you need to pay attention to with Kevin Warsh coming in, the new head of the Fed, God willing, he brings rates down because that's the only way the system can survive. If not, this will be a slow bleed until this private credit market collapses, and that will bring down people's retirements. An example, Blue Owl, they're already limiting withdrawals. That's spreading this out over time. But from here to 2030, there will be some sort of systemic collapse. Remember, 1920 to 1929, the 1930 collapse. Our most recent was 2006 to 2008. And there's always a massive collapse before a new system comes in. So don't chase cheap yield you don't understand. Make sure you understand what you're invested in. Liquidity matters much more in uncertainty markets than anything. Make sure you can get liquid. Make sure you can withdraw. That's why I love crypto. I can withdraw fast. And ask yourself this question. This is why I use insurance and I love crypto, is can I access my money when I need it? Because the people in the private credit markets who are invested in the private credit markets are now limited to 5% withdrawals. So they can't even get their capital. So always pay attention. You're paying for your attention. What we use is retirement. The elites move back and forth and trade. Always protect your capital. Warriors, rise. Get your shit together. Let's go.